everybody. Welcome back to our next lesson in our series on the styles of trading. My name is Michael DeGioia, and today's lesson is going to be on gap trading and fading, part 6 of our 8-part series. This is a style of trading that talks about capturing gap and goes, as well as gap fades, etc. So this is about trading and fading gaps. It's one of my most successful styles of trading. It's primarily done during earnings season. Earnings season comes 4 times a year. So Christmas for us gap traders comes 4 times a year. And it lasts for about a month, month and a half. And it gives you predictable opportunities to trade and fade gaps. This gap fades and gap and goes. So without any further ado, I'm going to jump right in, briefly tell you about myself. Longtime trader, 23 years of trading, traded in every role on the trading desk, from individual self-directed trader to professional desk trader to risk manager, market maker, and trading desk manager. Each of those roles are a little bit different. They teach you the different mindsets that are necessary for successful trading. Successful trading requires that you have different mindsets. The risk manager is a mindset of protection. The trader is about taking and managing risk. Sometimes he needs the risk manager to look over. You need the risk manager to look over your shoulder, tell you that you're getting a little crazy. The trading desk manager has the big picture in mind. This is why trading is so difficult for individual self-directed traders, is that when you're in the position and the scoring position to take risk, sometimes you forget that you might have oversized your position. If you're the trading desk manager, you need to keep the big picture mindset, a feel of what's going on overall in the market. If you're the individual trigger puller, sometimes you might lose sense of the big picture. So these different roles of the trading desk are very difficult for one individual self-directed trader to kind of emulate. And that's what we need to keep in mind, that we have to have all of these different roles in our head. We're the trading desk manager when the market's not open. When the market's open, we are a trigger puller and risk manager. And we need to really make sure that we manage our risk, because sometimes the market can get us upset and get us a little bit turned around, and we could go on tilt, and we need to know when enough is enough and when we should go back to following our rules. To be honest with you, you should never break any of your rules. You should have a trading plan. Your trading plan should be made when the market's not open. And that's probably going to be an upcoming lesson as well, creating a successful trading plan and, of course, implementing it in the live market. So we're not going to spend too much time on that today. We are going to jump right in and start talking a little bit about gap trading, trading gap and goes, gap fades, etc., and using our very, very powerful trading tool, the Dash Trader software, to trade gaps effectively. And I have to say that this is where your trading tools really get very, very important. And I just wanted to bring up this particular stock. We have EXPR. It's trending up. It actually gapped down today, and I want to show you how I found this stock. I use a very powerful tool in the Dash Trader software. This is the gap down list. So I'm just going to double click here on the gap down list. So this is the gap up list. We have one stock, VRAY. Actually, this is our runners. This is where I found EXPR. Here it is. It's just covered up by my chart. Let me bring this back here. So here's a stock. It's on our runners list. This is EXPR. Clearly, it's running now. We had talked about identifying trading opportunities and stocks. I can sort. Okay, I can sort my stocks by which stocks are uptrending. Okay, which stocks, the force of the uptrend, using my trade signal software. Now, this is not a true gap stock. This is a stock that has just been identified and is running. But my knowledge of gaps, okay, will helped me to identify that this stock is a good stock for me to trade. Now, probably at some point it's going to run out of steam. Okay. But I want you to look at this information that I have here on my little trade signal window. It tells me all the main details that I need to know that this stock is a runner and how long it could potentially continue to run. So what are some information? So here's the price of the stock. It's a fairly low price stock. It's $7.74 now. It started the day at $5.80. The force of the move is very powerful. It's 78, very, very powerful, strong move up. It has 58.94 million shares currently trading. Its percentage of float, 88.9% of the float. So there's a large percentage of the float outstanding. The market cap is fairly small. Short interest, okay, outstanding shares short. There's 66 million shares short interest. So there's a fairly high amount of short interest, and the stock is obviously surging. So for whatever reason, this stock is on the move today. Let's take a look at the daily chart. Okay, daily chart was a beautiful buy setup. This is a little bit more of a technical day trade. It broke past its prior daily resistance, and it's just in full swing to the upside. This is a powerful runner. Okay, not a true gap trading stock, but talking about stocks like this will help us to identify true gap trading stocks. Let's take a look at some gap trading stocks. I just brought up, so there's really no gap in V. Little gap up in MasterCard, but a gap up in Fade. So what did you notice I've done so far? First thing I did when looking at gap trading stocks, I moved to my daily time frame, because most of the analysis on gap trading stocks is done on the daily. So let me find another one. Let's see, X. When I find a good gap, perfect. I found a good gapper. Okay. So here's a good gap stock. Why? The move is down. The setup is down. Down bar, down bar, down bar, down bar, down bar, rally into declining moving averages. It closed yesterday right there at, I'm going to say 24.12. Let's just see what the actual closing by using my crosshair tool. Closed yesterday at 23.31. It gapped up today to 24.71. Yesterday's close was 24.28. Gapped up 50 cents today, but it gapped up into moving averages. Great gap setup. So it gaps up into moving averages. That's a gap fade setup. Okay. Let's take a look at the 2-minute chart on this. Okay. Or the 1-minute chart on it, just to really zoom in. I'm going to do the 2-minute because I want to see the prior day as well. So yesterday, we had a nice run up yesterday, and then we gap up today. Look at that gap fade from open. Boom, right down. Drops on a 70 cent. So 70 cents, dropped 70 cents in literally 2, 4, 6, 8, 10 minutes. Great gap fade example. Great time and place to reshort this is right here. Retouch, top, double top, drop. Retouch and drop after a gap fade. The daily setup confirmed, right? Daily setup. Let's take a look at the daily setup one more time. Daily setup is a potential sell setup. It's a sell setup into declining moving averages. And sure enough, we get a gap fade. And then we get a revisit, double top drop. And my bet after this lower high, which is a confirmation of the downtrending move, my bet would be that this stock is going to, by the end of the day, break that double bottom low and retrace what was a clean move up yesterday, make a clean move down today, right? We had the big run up on this stock was caused, this is U.S. Steel, was a big run up caused by the potential passing of the infrastructure bill in Congress. So there was an announcement about the infrastructure bill, and therefore U.S. Steel benefited. That was why it ran up. And then, of course, that is exactly why it might run down today. So beautiful gap trade and fade opportunity. This would be a fade opportunity on US Steel. Now let's take a look at our other scans. So just to point out our scans, we have a gap up list, a gap down list. Now, I don't have a tremendous amount of results on my gap list. I only have one stock that gapped up today that met my list criteria. When I double click on it, I can bring up that stock. Here it is. I'm just going to drag this right here so that we can take a look at it. V-Ray gapped up, didn't really do anything, so I don't really have much to say about that one. But having the ability to scan using my gap up and gap down list, great capability using the trade signal list inside of Dash Trader. Now let's take a look at some others. Is there anything running down today? So if I'm looking for stocks to go long, I'm looking for runners up. If I'm looking for stocks to go short, I got my runners down, right? I have my droppers and my risers as well, but they don't have as many, right? So let's take a look at this one here. Again, I like to do my scans on the daily. Don't really see anything great from this particular stock. So what I like to do is I like to look at my scans on my daily, and then I go from there. For gap trading, it always starts on the daily. So let me take a look at another one. Another one that I would think would have a gap would be a stock that that was mentioned in the infrastructure bill. 3M certainly got a benefit today. It was up yesterday. It was up today, but it doesn't really have a lot of movement and no gap. Gap up stock. Here we go. We got a John Deere, also a beneficiary of the infrastructure bill. So you see this downtrending pattern. Up bar, up bar, up bar, up bar in anticipation of the infrastructure bill's announcement. Then we get a gap up, and then of course we get a gap fade. So we got an initial gap fade. This one went a little bit higher. We get the moving average crossover, and then there's your secondary gap fade. So because the daily setup was good and the reason behind the trade was good, we got a gap up to the yesterday's high. Prior day's high, gap up into resistance at yesterday's high is the perfect setup for a potential gap fade. Let's see if I'm going to go check out another stock in this sector. But I want you to notice how I'm finding stocks. I found a good one. This is Caterpillar. So if John Deere had a good gap up and fade, okay, any stock that was related to that piece of news, the news that I had from yesterday was that we have a pending deal on the infrastructure bill. Biden and the Senate Republicans and the bipartisan committee to create an infrastructure deal had a pending deal. That was the news that would create gaps today. But it could be anything. It could be earnings in earnings season. It could be any news event that is current to that particular time. So I read my news in the morning. Usually I look at the most popular news source, CNBC, Yahoo Finance, Google News. I look at whatever popular news source, CNN Financial, whatever it is. So there's a lot of very, the Motley Fool. I'll check a couple of websites and I'll see what news are traders talking about today. If it's the infrastructure bill, that's going to be the thing that creates my gap. So I say, okay, infrastructure. Who's going to benefit from infrastructure? US Steel, 3M, John Deere, construction equipment, Caterpillar. So I go through that list in my head, okay? If I don't have any stocks that are automatically on my gap list from my scanners, and I say, okay, I'm going to look at the stocks that are giving me indication that they might react to some news catalyst. And then I go, okay, great. I got Caterpillar. Caterpillar's been up for 1, 2, 3, 4, 5, 6 days. It's a daily setup. Where is Caterpillar gapping up into? 222, right? 222 is the high on Caterpillar. It's gapping into resistance, yesterday's high. Great setup to fade. The news is already out. The story's already over. We buy on the anticipation of the news. We sell the news, right? Buy the rumor, sell the news. You've certainly heard that in the past. We have a gap up into that rumor, into that news, right? Let's see the 1 minute chart. Boom, fade right from open. And it fades right down from 222, which is the high. Probably couldn't get in right at 222. Maybe you get in at 221, 221.10. maybe even 220.88, whatever the case is. Certainly could get in 220.88, 220.75. And then we get a fade all the way down to 217. That is a significant move. That is enough move. And where do I get the idea that it's got enough move? Look at the range of yesterday's bar. Yesterday's bar went from 216 all the way up to 222. 216, 222, that's a $6 average range. So on 100 shares, if I make 100 shares goes down $6 or even $4, $400, for me, that's enough profit potential with a very, very limited amount of risk. And how do I know my risk? If I look at the stock and I look at my chart and I say, okay, 222 is where my stop has to be. That was yesterday's high. 222 is yesterday's high. If I get in at 221.13, okay, 221 even, I have $100 risk on that trade to potentially make $400 or $300 or $500 if it completely reverses the yesterday's entire move. So the way I'm looking at it is that's a big enough risk reward for me to want to take that trade. Now, every example that I've had today were gap fades, okay? We really didn't have any great gap and goes, but let's take a look at NVDA. There's a stock that often has a lot of, definitely a high beta stock. This one, no gap really to speak of. Let's take a look at AMD. Really, I mean, this was a really no gap to speak of. Let's see. Trying to think of another good stock that may have had a decent gap. Let's see if any of the financials, no real gaps in the financials. Yep, no real gaps in the financials. But I'm looking for a stock that has a big enough wide range bar the prior day that if it's going to be a gap reversal, like a gap fade, that gives me enough profit potential. Otherwise, I'm looking for gap and goes. A gap and go is when a stock gaps up past resistance. So the best thing I can do is show you on Caterpillar that if Caterpillar had gapped up past 222, not below 222, if it gapped up to 222.25 per se, then the resistance at 222 would become support. And then I would expect Caterpillar to run to 226, right? Because that's where the next moving average is. So there's clear air for me to run higher on Caterpillar. So the idea of gap fading is if the stock gaps into resistance, but not beyond resistance, it has to gap below resistance, you expect it to fade. If it gaps beyond resistance, you expect the stock to gap and go and continue. And that's really what we're looking for in gap trading. The beautiful best time for you to gap trade is earnings season. You know 2 weeks in advance, 1 week in advance, what that the stock is going to have news. You can read the reports of the analyst in terms of expectations. You can gauge and look at the chart prior to the earnings announcement and say, okay, if it gaps past this resistance level, it's going to be a gap and go. If it gaps below this support level, it's going to be a gap and go. But if it gaps onto support or above support, it's going to be a gap fade. If it gaps below resistance or onto resistance, it'll most likely be a gap fade. So you can tell whether it's going to be a gap fade or a gap and go, and you can kind of plan your trades accordingly. On that note, if you want to learn more about all of these different styles of trading and more about gap trading, there is an entire slew of, and I say that word on purpose, there is a slew of different strategies related to gap trading. And I'm just going to, bring them up right here, right now, so that you know what they are. There is the gap fade, the gap and go. There is the bull trap, bear trap. There is the bull kicker, bear kicker. There's the bullish engulfing bar and bearish engulfing bar. There's the 30-minute play, 30-minute play long, 30-minute play short. So just there alone, I just gave you 10 gap trades, 10 different setups with very, very specific rules that you can apply. And literally gap trading is the instant gratification style of trading. You literally know how much you made by 11 o'clock in the morning. There are some longer term gap plays that you can extend those trades into multi-day swings. But certainly there's a fast and furious kind of get in there, smash and grab kind of style of gap trading that you can do during earnings season. And if you're interested in learning that style, it's one of my specialties. It is learningtodaytrade.com. You can certainly go there. You can continue your education with me on an individual basis. Scroll down to our featured educators section. Just look for my picture or click on my name and select what coaching session you're interested in. Best way to get started is a 30-minute consultation. It is just $50. And then, of course, we can choose what package is best for you. It's on average $300 an hour, but we sell 5 and 10-hour packages, even 20-hour package. The bigger package you buy, the better discount you get. And again, this is one-on-one trading in front of your computer using Zoom or Skype. All the sessions are recorded. You get the recorded sessions at the end of the time. That way you have, proof that the coaching was done, and you can always go back and review your coaching sessions. I hope that you decide to join me. If not, no worries. Trade well. Continue to watch for my upcoming videos. I'm going to be teaching 2 more sessions about styles of trading, and then we're going to go into some more specifics over time. So stay tuned to all of our upcoming educational lessons here with DAS Trader. Thank you so much.